I wanted to take a moment to really educate investors about why I believe long-term single-family rental homes are going to be one of the best asset classes to have in their portfolio. And to me, that really comes down to a supply-demand mismatch and a huge opportunity to aggregate homes. So I want to walk through kind of our thesis of why we're building this REIT and what we expect to take it to. And to start with that, I think one of the common misconceptions is how large this market is. Today, single-family rentals are nearly 16 million homes. But the value of those homes, interestingly, is nearly identical to the value of all the apartment complexes out there. So we're talking 16 million single-family rental homes comparatively to about 19 million apartment homes. So this is a large market. And what's even more interesting is if you think about apartment homes, who owns those? Jim, it's probably a loaded question, but it's mostly owned by institutions. So you think of large publicly traded REITs, you think of large organizations, they own most of those garden-style apartment complexes. Who owns the single-family homes today? Well, you know what? It's mostly smaller investors. And that's really demonstrated here. Only 2 to 3% of all single-family rental homes today are owned by institutional investors. The PEAK Housing REIT is an institutional investor. Other publicly traded REITs are as well. Pension funds, groups like that. And even though all the news that you read about institutions coming in to buy single-family rental homes, that's true. They're definitely here to be buying. And I think in Q1, Redfin just said that between 18 and 20% of homes were purchased by institutions. That shows that there's a big aggregation story coming right now. But today, we're starting from a very small point, only 2 to 3%. So what our thesis is that the PEAK Housing REIT can be very efficient in buying homes that are high quality and aggregating a portfolio. Our intent then is to aggregate to a portfolio size that a larger institution that is trying to place more money could come in and buy portions of our portfolio or absorb us all together, provide liquidity for investors, all sorts of good things. So this is an aggregation story. And the big thesis here is that we can buy houses today individually, which is pretty hard, for a discount compared to what the whole portfolio will be worth when everything looks the same, is managed the same, and is super easy to operate for a large institution.
The hosts of the YQA Investor Podcast are not licensed accountants, attorneys, or financial advisors. This podcast is free entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.